One possible mitigation technique, if they do bring a worker classification against you, can be found under the Internal Revenue Code under Section 530. It may be possible to escape liability for past and future employment taxes and withholding if you meet the terms of IRC 530. 3 conditions have to be satisfied to qualify for this relief. 1, the employer has filed all required income and employment-related tax returns. This is called reporting consistency, and what's most important here is you're issuing the 1099s, so the government has the ability to match what you paid the independent contractor versus what they reported on their tax return. If you haven't been issuing 1099s, you could literally be accused of aiding and abetting income tax evasion at the worst case scenario. The second required factor is the employer has been treating all similarly situated independent contractors in the same manner for a consistent period of time. The last and most important factor, the third factor, is that the employer has a reasonable basis for qualifying somebody as an independent contractor. In other words, you have some sort of a safe harbor. Reasonable basis to call somebody an independent contractor rather than an employee can be found in case law, IRS rulings, IRS technical advice memorandums, and private letter rulings. Although a private letter ruling better be specific to your situation. Legal counsel will be able to work with you to tell you whether you qualify for this relief or whether some sort of compromise should be reached if necessary. Another possible methodology for solving this problem is the Classification Settlement Program, or CSP. A compromise can occasionally be reached under the IRS's Classification Settlement Program.